The views expressed on this podcast are those of the participants, not of Reuters News.
Trade wars are now giving way to trade deals. Over the past week, the United Kingdom has inked a deal with India as well as the US. And on Monday, the day of this podcast's recording, the US and China agreed to remove triple-digit tariffs on each other for a period of 90 days, which investors are hoping will deliver a more permanent trade agreement between the two world's largest economies. What these deals mean and how they're likely to impact the global economy is the focus of this week's Viewsroom. Welcome back to the Viewsroom, the weekly podcast that invites you, the listener, into a lively debate with Breakingviews columnists. And I'm your host, Amy Donlan.
And I'm Jonathan Guilford. As is the case with so much of the recent news cycle, events around tariffs and trade are moving very quickly. So we must preface this conversation to say we're recording it on Monday afternoon London time, morning in the US, and for now it looks like the US and China have come to a temporary agreement to slash tariffs from 145% down to 30% on the US side, and from 125% down to 10% on the China side. Amy, this looks like a pretty big de-escalation on the face of it, right? And markets seem to be pretty excited.
Oh, it does. And really like an about turn, it seems, on China's side particularly, because, you know, we were hearing from them that they were really wanting to make clear that they were not in talks with the US. They talked about that quite a bit. And then, yeah, to see this kind of deal emerge, which is, as we said, it's sort of a temporary pause. It's a deal. It's at least a good sign, I would say, yes, for the markets that things are not as, not as difficult or as strained as they thought they were between the US and China, and that maybe a deal could be struck between the two.
To your point, though, it almost makes the whole thing more baffling from both sides, right? Because we get this kind of, let's say, bilateral climb down. To a certain extent, I mean, to be clear, US tariffs on China are still higher than vice versa, but still really unclear progress on literally anything on the ostensible policy agenda that tariffs were supposed to solve. So now we've moved from talking about the underlying issues to just the level of the tariffs themselves. It's all a little bit head spinning. But fortunately, we have two experts who have been following the tariff drama long before US President Donald Trump announced his Liberation Day tariff barrage on April 2nd. We have Gabriel Rubin from our Washington, D.C. office and Neil Unmack, who is based in London and is an associate editor at Breakingviews. Gabe, Neil, you are very welcome to the Viewsroom.
Good to be here.
Neil, before we get into the really meaty story that is just breaking today on China and the US, can we talk a little bit about the UK and the events that unfolded last week? Because it feels like that's a nice setup here. Maybe a kind of indication of what, let's say, countries not on the China track are going to be doing with the US. So what did the US-UK deal involve? Obviously, the UK was also cutting a separate deal with India. How does this sort of indicate where other countries are heading in their trade negotiations?
Sure. Well, I guess there were two deals, right? So as you say, the India deal and the US deal, both extremely different. The India deal is interesting because the UK has been trying to do a deal with India ever since Brexit, essentially in 2016. And the hope was that the UK would leave the EU and be able to strike all these wonderful deals and become a free trading nation. And that process has actually been very difficult, partly because of the UK's reluctance to engage on things like lowering visa restrictions on for Indians. And essentially the trade deals have gone nowhere. What happened was that the UK and India have managed to do a deal very, very quickly. They've started negotiations in February. And I think that is to some degree an indication of essentially countries' desire to move on and to strike deals, given all of the uncertainty around the US. And to a lesser degree, it sort of also illustrates the UK's ability that it does have the right to do trade deals outside of the UK and can move quickly. That's sort of the positive spin. The sort of less positive spin is that really this is a very sort of thin trade deal. While it is legally a trade deal, the economic impact on the UK is likely to be very, very modest indeed. Something like 0.1% of GDP increase by 2040. And the tariff reductions that are in place are staggered over a period of time and quite low. So the deal does essentially show that the UK can do deals, but ultimately and that countries want to move quickly to deal with the uncertainty created by Trump. But ultimately, there is a limit to what they can really achieve and agree partly given the uncertain backdrop and partly just due to existing political constraints. So that's the UK-India deal. Then at the same time, we also had a UK-US deal, which is totally different because it's not really a deal and is very thin and may not stand the test of time.
I was curious, Gabe, just to draw you in here, because as you said, as Neil's just talking about, that it's a very thin deal, like, not a huge amount of, meat to really get at, even though there is some beef in there that we can talk about. But Gabe, I just want to know, if you were many of the countries that the US put tariffs on, I mean, they put tariffs on pretty much everybody. What window does the UK deal open up to you in terms of how your country might fare? Does it provide a template in any way as to how other countries might be able to negotiate with the US and what they might be able to achieve?
Well, prior to the China deal that was announced this morning, I would have thought that a simple purchase agreement, some sort of modest trade deal that, normally under normal circumstances in a non-Trump era would have been announced by some, visiting dignitary or, something of a much more minor variety. But then today's China deal, there wasn't even that sort of concession. So really, for all the aplomb that Trump gets from some of his supporters for deal making, these are two very, very for lack of a better word, pathetic deals on the part of the U.S. president who fancies himself a deal maker. He got nothing in return from China. Literally nothing except a mechanism for continuing to talk and, lowered tariffs, as we mentioned, by 115%. He got something from the UK. I mean, at least there were some sort of purchase agreements, $10 billion of Boeing planes. Of course, some purchase agreements in the other direction also for UK cars, which will, especially benefit companies like Jaguar Land Rover. So essentially, what does this mean for the US trade partners who are trying to negotiate? I think you can get a lot from the Trump administration while offering very, very, very little, because Trump has backed himself into a corner and is essentially negotiating against himself. And he just wants to get out of that corner and will take anything, literally anything, as a win, including the promise of future talks.
Right. I think we should try to pause for a second here and think about what hasn't changed, though, right? As a result of these deals, we still have that 10% tariff baseline. It seems, I think, stickier than a lot of people were presuming, right? Because if you're the UK and you don't suffer from this kind of perceived trade deficit issue with the US, you are in the black as far as they're concerned. They're accounting of the unfairness of trade relationships. Even then, you can't get rid of the 10% baseline, right? So if we think about what's going on here, I don't know, there's a lot of noise around pauses and interim deals and so on, but it feels like we're just heading to a world where the US is just going to have tariffs that once upon a time were unthinkable across all of its trade partners, right? Or is that too gloomy an outlook?
No, I think that largely sums it up. And frankly, right now markets are just begging for some certainty. I think they will eventually realize that a 10% tariff across the board is very bad, but in this situation, it looks like an improvement from the current. Either from the so-called reciprocal tariffs that were announced on Liberation Day, which made absolutely no sense and would have tanked the global economy had they stayed in place in that form. But once that sort of uncertainty, once the relief from getting that uncertainty lifted wears off, we're going to realize that trade is much less free than it was prior to Trump retaking office. And the longer term costs of that will start to become evident.
And Neil, I kind of just wondered, from the UK point of view, as a kind of counterpart country here that's negotiating against or with the US, that's a pretty grim outlook in a way, right? Even if there seems to be some indication from the deal that there are maybe individual industry specific things that you can kind of wheedle out of the relationship.
Sure, I think the UK, Trump has played the UK pretty well here. If he'd come out and just said, "I'm going to give you a 10% tariff," and take it, then the reaction would have been very bad. But as it is, he sort of threatened, much more. Then the UK we struck a deal, and as a result, you had the Prime Minister talking on the phone to Donald Trump and saying what a fantastic deal it was. Whereas if from the outset it was clear it was just going to be a 10% tariff increase, that wouldn't have been the case. I guess it'll probably be much harder for the EU to strike that same kind of deal. So that's probably the next big test that the market needs to see, is whether we end up with perhaps we don't get a UK style deal with certain purchase agreements. Perhaps we get something closer to what we just saw with China, i.e. just sort of agreeing to disagree essentially and just kicking the can down the road.
Gabe, you mentioned certainty. And I think that one of the things that was really kind of striking about the deal today between the US and China is this sort of 90-day pause, right? As in, you bring down the tariffs dramatically. I guess in theory that allows Chinese companies to just like plow as much stuff into the US as they possibly can over 90 days. People can stockpile, this sort of delays everything for quite a while. But again, if you're a company, if you're a CEO or anybody trying to make long-term decisions, surely this is like the antithesis of what you really want. This is the last thing you want, is to have this delay that sort of almost delays your decision-making capabilities. Because if you think that there's going to be huge tariffs between the two countries, you can almost make decisions based upon that.
Yeah, I think that companies are probably now thinking that, the U.S. sees extremely high tariffs on China and decoupling on China. And, Treasury Secretary Scott Bessent even said this up front. Decoupling is not what they are looking for. They have sort of pulled back from the notion that this trade war is leading to a complete separation of the U.S. and China as separate economic spheres. Whether you believe that is a separate question, but, their rhetoric has changed. They're not looking for a decoupling. There was lots of positive talk about how, we weren't as far apart as we thought. The talks went a lot more smoothly than we previously thought. That was the sort of readout of Jameson Greer, who is the U.S. trade representative, and is quite a hardliner on trade. So you end up in this situation where companies can sort of be a little more optimistic that the situation between China and the U.S. will not be as bad as it seemed just a few days ago. But at the same time, as you said, Amy, this is a 90-day reprieve. We don't know what those tariff rates are going to look like afterwards. And for these 90 days, companies, especially large importers, especially retailers, for example, or tech companies that import a lot of inputs for software for consumer electronics from China, they're going to be in a position where they don't know how much to bring forward, ahead of these tariffs, what they can leave for after the 90 days. So they're just in a situation where the uncertainty has not fully lifted, even if they're a little more optimistic about the future.
And even the UK deal, right? How legally robust is it? Is another question. If you're a country, can you really plan around what essentially is just a handshake between Donald Trump and the UK trade representatives? It's not.
And what's actually even more complicated on a macro level, for the UK or for any U.S. trade partner, is sort of understanding how these trade flows are affecting things in the near term, because there is going to be so much disarray in terms of building inventories and shipping. Shipping has lags. It takes time to get things across the ocean, and the economic data, the shipping indicators, all of the things that economists and companies and forecasters look at to make decisions is just going to be completely in flux for the foreseeable future.
And should we be basically taking this as, because I guess, Gabe, what I'm listening to, I'm kind of thinking that you could interpret what's going on as that it's not going to be as bad. But at the same time, what you have then is extend and pretend, right? Keep going with the delays, and pretend like you're not doing tariffs, which you are, which are ultimately causing much harm to companies. Do you get the impression that is what we're going to see now for the next while, until either Trump gets braver and kind of commits to it, or the markets get more comfortable with it?
Yeah, I think you're seeing a situation where Trump is seeing his leverage evaporate because he's not using it very well. So to the extent that he can continue using these triple-digit tariff threats going forward, you'd have to figure that the markets will not believe him, which means that if he does go forward, the crash will be much harder. Or the risk is that that companies do believe him, that there's a possibility of extremely high tariffs coming in just 3 months, and as a result, economic activity collapses even with this reprieve. So that's why certainty is really important. That's why sort of a cogent, coherent, helpful, growth-oriented trade policy is like an important thing for a economy to focus on, and that is not what the Trump administration is doing right now.
Right, that's what I'm kind of wondering, because we've mentioned, Bessem, walking back the idea of we want a complete decoupling with China. We have, various kind of commentary back and forth about the size of revenue that will be raised by the tariffs and whether that is maybe one of the kind of primary goals here. Is this is potentially a foolish question, but like, is there any kind of grand theory of what Trump is trying to achieve here that we can discern? Because, we've had years of academics and politicians arguing that a titanic rebalancing of global trade is needed to solve the twin problems of a massive Chinese trade surplus and a massive US trade deficit. And these are kind of like the two defining features driving the world economy. If where we end up is we just get this kind of extend and pretend on tariffs as they are right now, and this ends up being the baseline, like, what can we kind of pull from that in terms of what the administration is actually trying to go for?
It does not appear that they have a clear goal in mind. They have several unclear goals in mind, whether that's bringing manufacturing back to the U.S., revenue raising, or removing non-tariff trade barriers. Those are the sort of stated overall goals. But since those are sort of irreconcilable when you try to put them all together, they need to sort of pick a lane. They need to figure out, whether that's the Biden administration's strategy of sort of protecting extremely sensitive industries and trying to build up a domestic capacity for those industries, semiconductors, certain mining sectors, even, building up a lithium industry in the U.S., batteries, green energy. I mean, that's one approach, sort of industrial policy with they call it a high fence in a small yard. You sort of protect, very key industries with high tariffs, but the rest of it is free trade. But the Trump administration didn't come in with that kind of clarity. And you can fault the Biden administration for the results they achieved, although that obviously is a longer term process. But at least they had a sort of clear agenda in mind, even if you disagreed with it. The Trump administration just seems to have all these goals that they're not matching up.
You can see that, in fact, today just with the pharma announcement, right? So Trump has said he wants to launch an investigation into into drug manufacturing and bring back drug manufacturing to the US, which you can see the logic of that, given that it's the single largest market in the world. And then at the same time, today, he says he wants to drastically cut drug prices back to the lowest level of any country. So if you're a pharma CEO, those two things are completely irreconcilable.
Absolutely. And one thing I was curious as well to Neil and Gabe is, were there any signs from China? Now, we mentioned obviously the US and the leverage that they're losing the longer this goes on. But in terms of what China is willing to compromise on in what we saw from the announcement today, because obviously that's key as well. As in, it was interesting, I thought, in the lead up to this announcement, China were regularly saying that they weren't actually even in discussions with the US, and that to stop saying that they were, because they weren't. So it seemed quite tense. And then all of a sudden you get this sort of, well, we'll do a 90-day reprieve and we'll back down, and on both sides. So I just was curious, what happens at the end of this 90 days? I know it's so hard to know. You can't predict Trump, but you could probably predict China a bit better than you could Trump. So maybe, Gabe, I'll start with you.
I mean, presumably, it seems that, Xi Jinping and China overall is prepared for the long haul on this. And they are trying to sort of bulletproof their economy to the extent they can. Obviously, it's not so easy. But they are, trying to do everything they can to maintain their position in the global economy as the premier exporter. I mean, they, what does that look like? Do they flood other markets with their exports? Probably. So what does that mean after 90 days? I think that China continues to sort of push a really hard bargain here and to, give the US something related to, fentanyl inputs, which, cracking down on that and doing some of the non-tariff trade barrier stuff that allows U.S. exporters perhaps more ability to sell in China. But those would really be fig leaves for the overall rebalancing of global trade, which, China, I don't think feels any need to compromise on at the moment, because they feel like they have the U.S. on their back foot, because so much of, Trump's approval rating and the overall feeling of the U.S. consumer is based on access to goods and inflation. I mean, if if the US suddenly faces massive shortages, that is a political problem for Trump in a way that it is not a political problem for the Chinese government.
So given that where we've ended up with China, with this 90-day pause, do any other countries have any incentive to do a deal in the next 90 days with the US, or do we just have a series of extensions?
I mean, so far it suggests that we're just going to get the extensions, right? Yeah. I mean, based on his behavior with Mexico and Canada and you know, the rollback of the Liberation Day tariffs, I mean, that's what it seems like to me.
Well, continued indeterminacy and no clear endpoint. Sounds like a reasonable enough place to wrap it up. Gabe, Neil, thank you so much for joining us on the Viewsroom.
Thanks for having us.
Thanks.